Good morning. This is Jared with the Helton Group, and today we're going to be lending some knowledge of what's going on in the mortgage market on July 7th. It's been a short trading week, which has made the news kind of highlighted. So we had the Fed minutes were released. They weren't really positive because they said they're going to keep raising interest rates. ADP came out with their jobs report showing job creations about double what they're anticipated doing. When you dig into that a little bit, a lot of them are part-time jobs, not full-time jobs. So I think some of it is kind of fake news, but who knows? Purchase applications fell. No surprise there. Jobless claims rose. But it's kind of mixed feelings on that. Basically, just a horrible news week for the mortgage business. And what you'll see is how that impacted rates. So how rates are impacted this week is they're up probably almost to their peak in the last year. So you see the trends are at the top of it. There was a time back in November, they're probably a little bit higher than this, but they're not trending great, guys. Everyone anticipated they'd kind of come down, and they really haven't at this point. I still think it's a great time to buy a house because the reality of it is there's a supply and demand problem. But man, it's getting a little bit more expensive. It's a little harder to do loans without points. No investor wants to have a borrower do a loan at a higher interest rate, and rates are going to come down in the future and then refinance it. So most loans have some points associated with them. So today interest rates are up about 0.5%. So your payment goes up about $90 week over week. So pretty big change. Your purchasing power went down about $20,000 week over week. Month over the last month, down about $25,000, and from last year at this time about $75,000. And then if you look at what it looks to buy downs make a lot of sense. You can go down 0.3% for only $300. So you certainly do that. So most people are probably getting loans in the mid sevens, which isn't great, but it's probably smart to buy that down. And that's what the investors really want, is they want borrowers to not have those higher rates, so then they won't refinance out of them in a short period of time. But kind of rough week. So if you guys have any questions, then you can always reach out and I can kind of explain it and maybe help you give some talking points for your borrowers. And then back to the rates. I think this is a 2015 year. I would love to go back to 2015 for the interest rates. Uptown Funk was a song at that time, and the rates were 3.75%. So a little bit better than what they are today for sure. And then as always, if you have any questions over the weekend, please reach out to any of us. We're here to help. Thank you very much, and I'll see you next week.